Welcome to Thursday Night Stock Charts Live. This is where we review our week. We review our small account as well. And that's what you're looking at in front of you right now. And we're going to talk about earnings. We're going to talk about whether or not we're going to have a Santa Claus rally. And will seasonality help provide that rally? We're going to talk about Apple's earnings, Coinbase's earnings, and a whole bunch more. So let's get to it. Uh, last Saturday, I spoke about on the Small Account Club live stream. Link below. If you're not currently a member of that live stream to get invited, that will be going private in 2024. So it's free. Enter your email address. We hate spam too, and get invited. We're just building up an audience list right now, and I'm going to give you an update on that account since this past week. On what was this past Friday or Saturday? This past Saturday was the 28th. All right, so the 28th, is that right? Crash. I'm having major problems with, how was that? I had to find out where this. Here we go. Get rid of that. Okay. Sorry about that. If we crash again, I'm not going to restart it because I don't want to waste your time. I did buy a new computer. I'll be setting it up after the show tonight. Hopefully, get it running by tomorrow. But crashing constantly now. All right. So small account again. Link below for that live stream, and that account we are up since we put $20,000 in the account on the 11th of August. We are now up 6.25% since that point in time, simply selling premium. We booked profits yesterday on Alphabet options. Then we reopened today a new trade on what the hell is it? It's a solar company. I forget what it's called. And Solar Edge, something like that. Somebody will remind me. And so this account is doing really, really well. And I'm going to talk to you about a trade we spoke about on Saturday, and we'll walk you through what we did and how we profited on that trade. Thank you, Seymour. Appreciate that. Judge ruled brokerage liable for naked shorting. Judge ruled brokerage liable for naked shorting, meaning they didn't have the shares to lend. I don't understand the ruling there. Um, Sometimes you see stocks that are short, like 100% over over their float. So I'm not exactly sure about that. Uh, maybe that's why. Not sure. Interesting though. Thank you for bringing it up, Falcon. Hey Bob, I bought PAYC at the very bottom of the attack. Can you help me understand what to expect if you're in the trade? PAYC. You got it. Yeah, again, folks, my computer's just been crashing horribly. It goes a couple of days, no problems whatsoever. Today crashed 3 times. So I already bought a new one. It's just a matter of setting it up. And it's going to be real powerful computer. See more. Thank you, sir. Awesome. Thank you. Thank you. All right. So let's get to it. Let's talk about what I had to say on Saturday with regard to uh, Align Technologies. That's the name of the company, Align Technologies. This is the live stream. I have it on 1.25 speed just to speed it up. So if you're wondering why did my voice sound so crazy, that's why I sped up the audio and the video. Hold on, let me make sure that you can hear. Yes. Okay. So you get, there we go. Again, folks, this is Align Technology, extreme oversold stock, and RSI was below 15. So we were looking for opportunities to the long side. This is my analysis of one of the stocks we wanted to trade, and we did that. So we're going to talk about the trade in a moment. There's a link below. I have a list, an infogram of my top priorities of what you need, a checklist of what you need before you can enter this trade. It's free. It's a downloadable PDF linked below. There's no audio? God damn it. All right, I'll start this back up. What a cluster F of a show tonight. Sorry about that, folks. I just fixed it. You should have it now. Long time. So it's got a lot of data. And for us not to use that data is kind of silly. So before we begin, we want to analyze where it's been and identify where it may be going. So this is clearly a stock that probably has a lot more downside to go. How do I know? Head and shoulders set up on a monthly chart, and we have broken the neckline. Now, I'm liking the 169 level on a line. If that fails, we're coming back down to 147 and change, perhaps even lower. These are the two price targets that I'm watching right now for Align Technologies. On the month so far, we closed out the week last week right at a support level. I think we could still press lower here. So what we're looking for is an overshoot to the downside, probably down to that 169 level on Align Technologies. And what's the shot here? What's the play? Well, there's a couple of different ways of trading this. One is to sell puts. We could sell puts below these support levels. And if they get put to us, guess what? We got a discount on the share price. That's one way to trade it. Another way to trade it would be simply to average in. So the last thing you want to do is go all in. We want to identify the quality of the close on the week. We closed just off the lows. That 169 mark is looking pretty sexy here. That would undercut the prior low here. That's okay. Daily chart. We're beginning to bottom out here, but I think that we can press lower. I think they're probably going to rally this early this week, and then they're going to roll it back over again down to that 169 handle because we're pretty oversold here. This needs a bounce, and then it's going to roll back over again. So I don't know whether or not I'll play. I may play this week for a bounce and then get out quickly. I may sell puts here. Okay, so let's pause there and let's talk about the trade. Well, I could have either sold puts, which is a bullish bet. Some people hear puts and they just automatically think bearish. No, we're sellers. We're the casino, not the gambler on the trade. So we could either sell puts or buy a call spread. We did both. We did both on this trade. So let's talk about it. Let's talk about our entry point. But before we do that, let's talk about the whys behind the trade. Why Align Technology? Daily chart. Now, we did not press lower on, we did not rally as I had expected on Monday, Tuesday. We saw a flat line of it around, let's call it just below 12 on RSI. This is a very, very, very good company. Very good company. So this was not going to stay oversold for long. So what I did is here on the 31st is that I bought my first tranche of call options on Align Technology. And here's the alert here. And this is the actual trade confirmation. All right, so our first tranche. Oh no, we sold puts. This is our put execution. And here's the first tranche of 5 contracts, 2150, 5 to purchase the call spread, meaning buying a deep in the money call option, simultaneously selling a deep out of the money call option. That helps finance the trade. And then the next day, as the shares moved lower, which was yesterday, right at lunchtime, I added more to the trade. We doubled the trade because it was getting beat up really, really bad. Jay Powell was going to come out and announce the FOMC decision, as well as have a press conference to say, you know what, this may be a catalyst to send this stock back up higher. Sure enough, that's exactly what happened. So we did not close positive yesterday, but we did rally. Let's go to the chart. We did rally to close well off the lows of the day. That set the stage in this descending wedge formation for a rally this morning, which we got. And on that rally, we booked profits on the call options. So we had 10 contracts of the call spread, and that was, we made a profit of $2.30 per contract on 10 contracts. You could do the math and figure out how much we made there. We also are up on the puts that we sold I did not close them out. I rolled them up. So we booked profits on, I think, the 155s or 150s, and we rolled them up. And this morning I sold calls. Now we're still in the trade, but we have a strangle on the trade, and we're still producing cash flow from this one trade here. So an awesome trade. I know Franklin was involved with it. Congratulations for those who joined in. Nice trade. So that was a trade from last weekend. Again, folks, link below. Get invited to our small account club where we talk about trades like this going into the new trading week. Okay, so today we had a face ripping. That's my line. Rip your face off rally. Face ripping squeeze sends stocks soaring as yield curve and the dollar dump. So that's people want to know whether or not there will be a Santa Claus rally. Well, we do got to talk about earnings, but all things being equal, the stars are in alignment. You're seeing the yield curve pull back. You're seeing the dollar decline, yields decline, setting the stage for a potential rally. Are there still concerns out there about this economy? Yes, there are. A lot of them. Tremendous amounts of concerns. So, but right now, it's rally time in the equity markets. The however is, how will the markets respond to Apple's earnings, which are bombing after hours now? And we'll go to that chart in a moment. We'll talk about that. Now, the CME watch tool, there is no anticipation really of a Federal Reserve rate hike in December. Go out to January. Not much of an anticipation of rate hike. They're done. For the next couple of months, they are done. And I do not think, and look at this, they're already factoring in a rate cut by March, 12.7% probability. But that's a long shot. So now let's talk about the economic data that came out this week. Nothing on Monday. Tuesday, employment cost index, that came a little bit hotter than expected. Today, we had the ADP numbers miss. That helped the stock market rally. Stock market loves bad news. That keeps the Federal Reserve sitting on the sidelines. U.S. job openings, that came in with a slight beat. ISM manufacturing index, last read was 49 spot 2, almost at 50, which would be a sign of expansion. So we improved last month for the first time in a very, very long time. We dropped back. The economy contracted, at least in the manufacturing area. Again, we continue to contract. Construction spending, as expected. Initial jobless claims, hotter than what was expected. All this bad news is good for a stock market rally, as sick and perverse as that sounds. Tomorrow, the Pimp Mac Daddy of them all, non-farm payrolls coming out. Watch average hourly earnings. If that comes in hotter than expected, stock market could go down. We also get ISM services tomorrow. That has been in a contraction. Watch and see whether or not this drops back down below the 50 mark, and that would be a major blow to the economy. That's coming out tomorrow. The Shiller PE ratio. So, drop my pen. So we had a rip your face off rally today, and equities right back above that 29 handle, flirting with a 30 handle. And when you take a look at the Buffett indicator, still very overvalued. The bank bailout fund, this gets reported every Thursday, at all-time highs. The regional banks are sucking at the teeth of the Federal Reserve as life support. And who knows, maybe Bank of America as well. This is a major warning. This is from Game of Trades. Analysts are repeating the same mistake they did back in 2008. Despite a sharp contraction in leading indicators, earnings are being revised upwards. So here's your forward-looking PE getting built out. This is what they're going to come on to CNBC and say stocks are cheap. Well, they're not cheap on a historical PE basis. They may look cheap on a forward-looking basis because your models are so off. But okay, we'll play your game. We're going to use rear view mirror numbers, actual numbers, and not fuzzy math. This is just out. The office vacancy rate is worrisome. This is the highest since 2005. We have never recovered really since 2007, 2008. We've never gotten back to the glory days of employment. Consumer borrowing, default rates. So these are all things that could hinder the markets moving forward, but not right now. The markets don't care. The consumer borrowing is more than they can afford. Default rates on credit cards from small lenders has spiked 7.51%, the highest level. This level is higher than the dot-com bubble, financial crisis, and COVID. And the average credit card interest rate is above 20%. That's usurious rates, but the banks, they get away with it. Now, as Fed Chair Powell was speaking yesterday, I posted this, the Atlanta Federal Reserve is now ratcheting down their guidance for GDP this coming quarter. Look at this drawdown here by the Atlanta Federal Reserve. Now, you wonder why equities rallied today with the list of things I've gone over in terms of economic data, in terms of the Atlanta Federal Reserve pulling back on their GDP forecast. This lines up with the performance that we've seen in the Dow transport stocks, and it's not good. It's just not good. Credit contraction. I've been warning about this. This is when the rubber really meets the road. When credit contraction hits. Right now, you're seeing consumers anyway. And I don't think this. I think this is more business lending, but you're seeing the consumer getting tapped out, and they're going to cut those lines of credit that remain for the consumer. The same thing's going to happen in businesses. They're going to take those lines of credit that are open, and they're going to cut them off. That's the lifeline for a lot of companies out there. And if that line of credit goes, look out below for the small caps. Now, the biggest problem for these markets is, well, I believe this is a good thing. The Federal Reserve rolling off debt at a rapid clip now. I mean, this is a huge drop in 1 week. This is reported every Thursday. So the 26th. So we were at 7,900 billion. So they dropped about 40 some odd $billion off their balance sheet this past week alone. That buoys interest rates higher because it's a nobody's buying our debt. So they're rolling debt off their balance sheet. The Federal Reserve is not a net buyer of treasuries. That means we're relying upon citizens, businesses, banks overseas to go buy our debt, and countries to go buy our debt, not the Federal Reserve. So that's a problem for the equity markets. Now, is everything bad? No, it's not. With 64% of companies reported, S&P 500 Q3 GAAP earnings per share are now 19% higher than a year ago. The third straight quarter of positive year-over-year growth. Quarterly stocks are now just 2% below the record high from Q4 2021. Can't argue with it. The problem is Apple. We'll go to that chart in a moment. But before we do, let's talk about seasonality as we go into the new month. S&P 500. Folks, we're using TrendSpider, link below, 35% discount code. And the month of, this goes back 31 years. The month of November is on par with April for being the best month out of the year, with December coming in just below. So we're heading into a historically very favorable period of time for the equity markets. It's very hard to fight this seasonality tape. So do I believe that equities are probably going to shrug off Apple? Probably. But we'll know. I may be wrong. I don't know. But I think what we're going to do is we're going to give back some of today's gains, putting in a higher low, and then moving forward to the upside. Okay, so Apple slide after revenues dropped for the fourth straight quarter, unexpectedly weak guidance. So, boom, sales bad, guidance bad. That's the worst combination to have. Forget about EPS. That doesn't matter. I log back into Thinkorswim. We'll take a look at the after hours price action here. Clark, my TLT calls printed today. Awesome. Congratulations. Jody, welcome. Andy, it'll cause the market to pull back. I don't know whether or not it's going to kill everything. You have too much end of year window dressing that goes on. There's a lot of powers out there that have an interest in seeing a strong close of the year. And once you get past the 15th of December, usually the computers go on autopilot and they just keep the market in check because the big players go on vacation until the first of the year. So here's Apple. Closed at 177.57. Last tick, 172.74. This is a lot lower a little while ago, but it is probably going to weigh on the markets tomorrow. NQ, we're down over a quarter percentage point. We were lower. We're coming back here. Let me set up an alert. NQ is the NASDAQ 100 futures. Okay, I don't know what that was. Okay. Moving on now, Coinbase reported as well. And they're getting walloped. The price action, or the price closed 84.60. They were lower. What's the news here? Revenue beat. That's good. All right, so they didn't like something about these results, obviously. Subscription and services revenue flat. That's not good for a growth company. All right, so now I understand. I'm looking for guidance here. Well, here's their results versus expectations. Q3 subscription and services revenue, $334 million versus the consensus of, they beat on revenue. I think there's an opportunity here to trade Coinbase tomorrow. What kind of IV rank did it have? Let's see if that holds up tomorrow. We may be playing Coinbase tomorrow. Okay. What else? I was in our Slack forum and I saw that Shopify had a big day today. Wow. What a move. So that was up 22.33% on the day. Awesome. All right, so some good earnings out there. Starbucks did well. Now, what I'm concerned about is not necessarily a earnings problem out there. I'm concerned about an event problem, a bank going under, a hedge fund, and a sovereign fund going under and taking the rest of the market down along with it, or geopolitical risk. All right, so that's earnings on Apple and Coinbase. Let's talk about the monthly charts. We're into a new month. We'll talk about monthly and weekly charts, and when appropriate, the daily charts. And now, because what we want to do is we want to identify what's strong, what appears to be working as we proceed into the new month, and how do we close out last month? Yield curve closed out last month very, very strong. No follow through yet to the upside. We are still steepening, but we are taking a breath. 10-year yield. We are now down on the month after a very strong October. Let's go through a weekly chart. And we are testing the lower band of the rising uptrend channel. So what this chart is telling us is that, yeah, we've had a pause here, but the trend is still to the upside. TLT. So TLT, nice reversal month so far. Horrible month last month. And we are nearing resistance at around 88, around there. Weekly view. Now, the thing to be worried about here is that we are near the upper band of resistance. I think that this could break out, but we are near the upper band of resistance. The trend is still down until, of course, it's not. So just be wary. If you're holding out for the top dollar here on TLT, think about booking some profits. If you break out, you get a pullback and a retest. You could always re-enter long, but think about if you have a good profit here, think about making some of it real. Tips, Treasury inflation protected securities. They are up on the month and they now have a new monthly higher high. I always look for that. Always look for that. Higher lows and lower lows. I don't want to see lower lows. I want to see higher lows, and I get bullish. I had pizza, way too much salt. Crazy amount of salt. Let's go to the weekly view. Really good week this week. Really good price action. So what this is telling you that you have investors out there that are buying tips. Why? They want protection against inflation. The dollar. I think we're going to retest here. This could be a double top on the dollar. Let's call this a wedge formation. We should retrace back down to this lower band of support. What is that good for? Good for gold, good for silver, good for emerging markets. Volatility. So last month, we had a lot of volatility in the volatility chart last month, but we closed well off the highs of the month. This month, we don't have a new monthly lower low, but we are down clearly 13.67% weekly view. A really horrendous week for volatility. Let's take a peek at a daily view. Held support. It held support today. Dow Transports. Now, this sector last quarter, or the past 3 months, I should say, has been annihilated. But somehow or other, we got a 4.9% GDP print. Somehow or other. Bidenomics. Weekly view. A beautiful, beautiful inside bar. We recaptured not one support level, but three. Two horizontal, one vertical, one trading day left to go. We don't know if it'll close there, but it's looking very optimistic for the transports. Dow Jones Industrial Average now up on the month, no new monthly higher high, up 2.33, over 2.33% so far on the month. S&P 500 monthly view up 3% on the button, no new monthly higher high yet. Let's go to a weekly view. Wrong chart. Beautiful price action here. Well, there's nothing else to say other than that. Obviously Apple's going to weigh on the S&P tomorrow. It's going to weigh on the Qs, so it's going to be an interesting day tomorrow. Daily view. What a rip. What a rip. If it wasn't such a seasonally strong period of time, I would look to start shorting for a scalp. But we did sell calls on Tesla. I know they're falling in the after hours session, so that'll help us tomorrow morning. Tesla had a ridiculous rally today. It's off of its lows, but it's down versus the close by a couple of bucks. That's good for us. Moving on to the Qs. Monthly view, no new monthly higher high yet. Higher lows on RSI. Weekly view. Real pretty. Real pretty. Daily view. They jacked it right up and into the 50-day moving average, which we haven't touched since the 18th of October. Let's check out the quality of the close. 15-minute will do. A good close. I think we're pulling back hard tomorrow morning. The stage is set. I mean, it was very, very overbought on stochastics. Not a lot of buying into the close, even though you had heavy volume. ADX is extremely overbought. I think they're going to pull this market back measurably tomorrow morning. Does it recover? I don't know. I'm not that smart. I am smart enough to realize that we're probably going to have a pretty brutal morning tomorrow morning, so buckle up. Small caps, monthly view. They recovered. No new monthly lower low yet. Up so far, 3.25% on the month. I'll probably look at a nibble on the small caps tomorrow on the pullback. I wasn't going to buy at the highs of the day today. Weekly view. We remain in the downtrend channel. No breakout yet. Let's go to a daily view. Very nice price action. I was waiting for 159 for IWM. Maybe we'll get it, but it doesn't look like it's going to do it much sooner. Or I should say soon, not much sooner. We're very extended here. We're going down tomorrow morning. This is going to correct tomorrow morning. We could possibly fill the gap. Buckle up tomorrow, folks. The banks up 3% on the month thus far. No new monthly higher high. I'm not going to talk about volume because it's only day 2 of the month. Let's go to a weekly view here. Beautiful price action. We're still in a downtrend, though. So beware the banks and don't chase them. Remember, these small regional banks are still at the Federal Reserve teat taking money so they don't go out of business. Technology, good month so far. I'm not going to spend much time here. We already did it on the Qs. Staples, consolidating, no new monthly lower low. I don't like this chart. Momentum is still waning here. Let's go back to the Qs for a moment. Monthly chart. Still okay. Still okay. That does not hold true for the staple names. Discretionaries, they're rallying, but they're in a little bit of trouble as well. Energy. They bounced today along with oil. They were down yesterday. They were down for the past couple of days, but they have rebounded. Weekly view. Reversal at the 50-period moving average. Daily view. Beautiful day today, up over 3% in one day. That is a tell. Now, here's the one thing that gets me is that we had a big move across the spectrum today in the markets. Where was the volume? Think about it. Up 3% on the energy stocks, yet volume was just above the moving average. You would expect on a 3% move a commensurate volume bar, similar to at least this, if not this, or better, this. Didn't happen. And it's not just oil stocks. If you take a look at the daily chart of Qs, up 1.82%, that's a big move in a single day. But look at the volume. Volume was lower today than it was yesterday. Still above average, but not awe-inspiring. You know, we've had much higher volume bars, like back here, than we've seen in the past couple of trading days. So just a little bit of worry wart coming out, that's all. Here's oil. Up on the month so far. Horrible month last month. Weekly view. And we're still fading here. We're still down below support despite the really good price action today on oil. Nat gas. We're long of nat gas vis-a-vis a call spread on Boyle. Now, we had a really strong end of month on nat gas. We're down this month so far, but I think this has legs. I think that we're moving up higher. And even when you take a look at the weekly squeeze on nat gas, we are firing off buy signals all day long here on nat gas. So we're looking very good on a weekly time frame for nat gas. Now, Boyle, it shrugged off losses this morning to close up, and you can see we're firing off a squeeze here as well. What this means here, what I mean is squeeze, that means you have the Bollinger Bands inside the Keltner channel forming a big pressure, a pressure zone, a compression zone on nat gas. And once it releases, it goes up really fast. I mean, Boyle was up 14% the other day. So I'm expecting to see more of that. It's consolidating some of those gains. Let's go to a daily chart. Let's try that again. Daily chart. You can see that big move here, and we're consolidating, holding the 21 period exponential moving average. I think that we're going to move up measurably higher here on nat gas. And in fact, I may be adding more to this trade tomorrow. Gold, monthly view. We began bull operations on gold. Technically, we began operations on gold over a year ago by buying the physical, but we began putting on a trade here of gold, buying call options, a call spread going out over a year on the GLD. We opened it up with a one lot. Why did I just go with a one lot? Because we were trading above 2,000 on gold. I kind of suspected we were going to get a pullback. We got the pullback. Now tomorrow's the time to step back in and to begin adding more to that position. And the same holds true for our gold stocks. They're looking very good. Monthly chart, NUGT, up month last month. Right now, they gapped us up into the wick of last month's candlestick. That is very bullish. Most of the times when you get a stock, commodity, whatever, cupcakes, you're charting cupcakes, and the prior month's cupcake had a topping tail, and the new month, you gap up into that topping tail from the prior month, that is bullish. Generally, that means we are going up higher. Weekly view. Now, I sold puts here last week at the 30 strike. You can see that we're underwater on them right now. Adjusted for premium, we're still going to be up if they're put to us. But we've reduced our basis cost. Rather than chasing the stock last week up here, I said, you know what? Let's be a little bit different. Let's sell puts and get paid a premium of over $2,000 on 1,000 shares or 10 contracts. And if they're put to us, well, we got a $2 and change discount on our share price. If they're not, well, we made $2,000. Okay, we move on. And we'll sell more puts. So right now, we're down on the trade, but that's fine. I really don't even care about it. But moving forward, let's check out the daily view here. What did we do today? I think we're up. Yeah. We closed up. I think this moves up higher. So the gold stocks, I'm really warming up to. GDXJ, same thing as NUGT, gapped up into the last month's wick. Love that. Good stuff. Silver. No such same gap here, but I think it moves up higher. And I think we're good here. I haven't spoken about gold money in a long time. We own this. I forgot all about this. Okay, let's go to I got to look in the members area. And see who requested what. Wendy, Crocs. I haven't looked at Crocs in a long time. Last time I looked at that stock, it was ripping through the ceiling. LYV. And AAOI. AAOI. All right. Trader Isaac, what did you have? Larry, hey, Larry, year-end rally, why would we? Can anyone think of a good reason? Window dressing, seasonality. Listen, I wouldn't be surprised if we didn't, but I think we're going to. Para, HBAN, and Big. Roku for Jody. Talon. Thank you, Bob. You're welcome, Seymour. Thanks for being here, pal. Have a great night. There he is. Demand the mission. Talon. Okay, let's get to it. I'm going to keep the seasonality up over here for these names, just so you have it. PAYC. Paycom software. Good looking chart. That's a 15-minute chart. Weekly chart. Not so good looking. I see opportunity here. Daily view. RSI bounce. Too bad. Too bad. I would not be a buyer here. You may get a short covering rally, but RSI is back above a 20. I would not chase it here. This could quite possibly rally, then roll back over. If we rally up to, I don't know. I don't know what we're going to rally up to. Where are we? All the way down here. 166 and higher. Maybe 178, maybe. I think it becomes a short. So I would not be involved here. And seasonality in November is only 50%. December is only 22%. So you do not have seasonality at your back here. I would avoid this. If you're a nimble trader, you're going to trade a new daily high or high and exit stage right on a short covering rally and don't go home with this overnight, fine, trade it. But I would not carry it overnight. Crocs for Wendy. Looking good. So it looks as though it's bottomed. We hit a volume shelf and we have since bounced. Now we're down on the week, yeah, but let's give it a pass. One trading day left to go. We could make up more ground here. I would think that a close above 85.54 would have me bullish on Crocs because we've been consolidating at these levels for a while now. Daily view. Oh boy, they must have reported, huh? Yeah. I would look to trade it or buy it on a close above, let's call it 83.50. I would adopt a wait and see approach here. Nice reversal off the lows, but I would be very, very cautious about entering this trade. Seasonality is not wonderful, up only 61% of the times in November, 47% in December, not wonderful. Now, what I do want to look at here is the IV rank. Ooh, very nice. We could sell premium here. Very nice. So I think the trade here is to sell premium. I wouldn't buy this stock. Why bother? You're sitting there thinking, oh, they had a bad earnings report. What's going to happen? I got to buy this stock. I got to carry it overnight. Why bother? Sell some puts, sell some calls, deep out of the money, 10 delta, go out 43, 45 days, whatever they have out there, and just collect some cash flow. But I like it. I like it. I could play with this one. This is a good one. LYV. Live Nation. Seasonality for November up 56% of the time. December, 59%. Not great. Good little rally here. You're going to have resistance right up here at 83.77. I kind of skipped the weekly chart. All right, so rough month of October. The month of November, it's being met nicely with some buying. The problem is that you have a lot of resistance above. I would just do this. I would create an alert. and I would enter on a successful breakout above resistance. That's what I would do. I want to see a weekly close back above 83.50 per share. We get that, I'm a buyer. AAOI, good price action on the week. Very light volume, though. I don't like that. It broke out today. I think this has legs. Volume on a daily time frame finally rose today. That's good. So it looks as though you had some shorts cover on this breakout. RSI looking very good. Seasonality, not wonderful, up only 55% of the times in November, usually down in December. So this is one where you may want to, if you're going to buy it, sell the rip, exit stage right. Para, P-A-R-A. Paramount Global. Let's go to a monthly chart here. I want to get a feel for where we've been. Okay, this is interesting. Long-term downtrend channel. And on the week thus far, we are just slightly above resistance. Now we do have, I must have gone over this chart once before. We do have another resistance level above at 1345, but this is looking good. Daily view, really good day today. Wow, look at this move. Very, very nice. I think we're moving up higher. And seasonality wise, folks, I mean, wow. November, this has got 18 years worth of data, up 61% of the time. That's good. But December is even better. It's the best month of the year. So, very, very good stock to trade the seasonality theme here. But obviously, I would wait for a pullback down here. And I think you're going to get it, especially with Apple earnings. Keep a little bit of sensitivity on, not much. Okay, so that's para. We're good to go here. Set it and forget it. If this alert doesn't fire off, I won't be looking for it. We have a rules-based approach. If this, then that. HBAN. Huntington. Wow, what a move here, huh? Weekly view. Very, very nice. Very, very nice. We broke out of a downtrend channel. And this is a weekly chart. So we're going to extend this out to, let's go 30 days. Daily view. What a move. Really, really nice. I think we need a retrace here, but very, very nice price action on Huntington Bank shares. I think they go up. Look for a retracement first. Buy the retracement, add on strength. You're welcome, Donnie. Thanks for being here, pal. Big lots. This is a stock that was getting beat up. We were watching this for a while, never executed on it. Actually, no, not Big Lots. We were Dollar Tree and Dollar General we were looking at, not Big Lots. Big Lots is another one And this is looking good here. I think we're consolidating. We have a potential inverse head and shoulders setup. Left shoulder, head, right shoulder, and let's get rid of this. Remove all rays. Yes. Create a new one. We break out and above $5 a share and close there. It's game on to the long side. You do have a lot of resistance above, but there's probably a lot of shorts in this name to help drive you through. Daily view. Good breakout on the day. Big lots looking good. RSI building a right side. Higher lows, higher highs. Good stuff. I'm liking it. Seasonality, not wonderful. Below 50% for November and December. Last chart up for the night is for the lovely Jody. Wow, I had calls here. God damn it, I sold them. Nice breakout. I had a call spread on this. Beautiful breakout. Outside reversal bar. If you don't know what that is, one of my top 5 favorite candlestick patterns. Link below. 5-part video tutorial. My top 5 favorite candlestick patterns. Free. I think that if we get a retrace back down to $74.55, then I'd be a buyer. Good stuff. Daily view. Beautiful breakout. Again, I think we're going to retrace back down to support. Let's see what Apple's doing in the after hours session. Let's see how the NASDAQ 100 is doing. Apple, well, that's his daily chart. It's not showing the after hours price action. All right, so it's drifting back towards the lows of the session. Not good. NQ, they are down now nearly 1/3 of a percentage point. My guess is that this selling pressure builds overnight, and it's probably going to be a rough morning tomorrow. So I wouldn't necessarily want to buy the dip tomorrow. I would watch for a bottom, let it rally, let it pull back off of that rally, see whether or not we take out the lows of the session. If we don't, and we make a new daily intraday higher high, I would then begin to look to build a position on whatever you're looking at. So that's my take, folks. I'm sticking with it. Everybody have an awesome night. Franklin, you are welcome. Jody, Donnie, Larry, everybody, thank you for being here. Seymour, thank you for being here. Everybody have an awesome night. Have a profitable trading day tomorrow and an awesome weekend. Members, I'll talk to you then. And again, if you're not on our small account club list, link below. We're going live on Saturday. We're going to have all sorts of fun. Talk to you then.